What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 13th of 2019. Well, folks, I hope you all are having a great day wherever you are, and today I want to spend some time to really cut out the noise and focus in on the fundamentals. I know that doesn't happen very commonly in the crypto space. A lot of it is hype-driven, but guys, I want to talk about what I'm really passionate about and where I believe the real fundamental value can be found right now. There's a lot of exciting things that are going on right now behind the scenes that aren't getting coverage, and I'm going to be talking about that in today's video. So I hope you guys can stick around. If you guys like the video, please drop it a like, leave a comment on what your thoughts are. Let's go ahead and dive into it. So I tweeted a few days ago about the two conferences that I went to. I went to Tokenomics in Bangkok and Thailand, and then also Hong Kong Blockchain Week, which is, well, you can probably guess, in Hong Kong. And these two conferences really amped me up about the potential for cryptocurrency to gain a lot of traction over the next year or two, because we're now finally starting to see projects and companies fixing the key issues that have persisted in the crypto space even for a decade now. So what are some of those areas of focus that need to be improved upon? Well, the first one here was wallets. This is one of my personal gripes. I'll go ahead and do a mini rant here. I mean, we still live in an age where I think the vast majority of crypto users who actually manage their funds off of exchange are using a mixture of some mobile wallets, but a lot of QT wallets, and wallets with really poor user interface. Not much functionality outside of sending peer-to-peer transactions through QR codes, and not even basic functionality and features such as contacts and having an address book in that case, and also having some functionality that you would need in order to become your own bank, right? That's the overall objective. Well, over the past few weeks, I got to see so many exciting things. I got to see a mixture of improved, clean UI across the wallets, user interface being much more intuitive, built-in access to DEXs and apps, which I'm going to be talking about here in just a little bit, or dApps more specifically, and simplified private key management. So you could truly become your own bank. This is very key. If we want people to actually become their own bank, we can't just say, hey, you need to be the manager of your own funds and manage your private key in a very complicated way, and just move your money to exchanges when you need it, but be against exchanges and don't use Coinbase, right? If I can't exchange, I've got to use exchanges. And along with that, again, when the design is not intuitive, you shouldn't be using it, right? Well, there's a lot of great projects out there, and guys, I'm not shilling anything, I'm not promoted anyway. I'm just talking about some of the projects that I saw and I've been watching across the space. And O3 Labs is one of the top ones in the NEO ecosystem. I got to meet, ironically enough, his name was Nick. He's a really nice guy who works out of Japan with the O3 team. And they actually went about building a really intuitive wallet for NEO. So you not only have all your basic functionality and you can manage all your NEO assets, but they have some really cool things that I'd been waiting to see in wallets. We've been talking a lot about DEXs in the crypto space, but when are we going to get to the point where you can actually use it on a mobile phone and it's not complicated? Well, O3 has done that for the NEO ecosystem. You can access Switch.io from within the wallet. You can access a variety of different dApps that act like DEXs or applications that allow you to do different financial services. There's ones that is, I think, like O3 Swap, which basically allows you to swap with a temporary middle party into different NEP tokens. So it allows you to actually have exchange services built into the wallet without needing some convoluted KYC process, without needing any extra details, truly having financial freedom here. And a variety of other applications built right into the framework, right? So I think this is extremely exciting. The UI is clean, and this is a prime example of the improved wallets being built. Now, another one as well is Ethos. Now, this has been around for a while. I've been following Ethos back when it was Bitcoins, and I've been a fan of what they're doing, kind of like an all-in-one wallet. I haven't talked about it much, but I do like what they're doing in this case. And the one thing that Ethos has really pushed forward has been one of the first kind of major wallets to do so with a clean UI and a wide range of cryptos is what I like to focus on. It's called Shamir Secret Sharing. This is basically a way where multiple individuals can hold portions of a private key. So to simplify it, let's say, for example, I don't want to be the bearer of my private key. It might be very bad if I, for example, lose, I'm not very responsible and I lose my private key, and now I can never get access to my life savings in crypto. What I could do is split up my private key into fractions and basically allow 5, 10, 15, 20 participants to own fractions of that private key. Whereas all I need to do is simply get maybe, for example, 3/5 or 6/10 of my private key from those participants in order to access my funds. So this is good for like long-term savings and like those who have a lot invested in crypto. And your main objective here is to give out some to like maybe your personal friends, but also to some who wouldn't be able to communicate with one another, right? You don't want 3 out of your 5 friends, not really being your friends and taking your funds. So you might want to mix it up a little bit with maybe keeping one of your keys in like a bank vault or somewhere very safe, and then maybe mixing with certain companies who might provide it as a service. But this is basically something that seems much more likely in the long term to work and much more probable for people and easier to use in that case. And I know actually as well, these 2 guys I met at the previous conference, Roscoe and Tom Howard, they're actually working on building a really cool wallet called Macendo. And that application uses this idea of Shamir secret sharing in a marketing aspect. It's very, very clever because you have to get 5 people to own your keys in that case. So it's a very cool idea. Now, the second thing that I want to talk about now outside of wallets is the change in the enterprise industry of blockchain, right? You've seen all these ICOs come out, these platforms and these utility tokens about how they're going to, build commercial applications for blockchain and industrial applications. And the one thing that I saw is that a lot of them are starting to focus on providing a B2B solutions. And what I mean by that is really, starting to interact in a software as a service framework. So for those of you who don't know, software as a service is basically, I'll give you a good example. If you subscribe to Salesforce, if you use I'm trying to think. There's all types of applications. You might, for example, be a part of Office 365 using Windows applications, things of that sort. No matter what it is, whatever software that you're actually buying in this case on a monthly residual basis is software as a service. It's providing some kind of software, some kind of computational resources, something of that sort for a fixed price, right? You could use Amazon Cloud and things of that sort as well. It's basically in that framework where they're providing something on a consistent basis. Well, you could do that with blockchain. You can do that with smart contract creation. You can do that with having a ledger that's immutable to record certain transactions. And that's what blockchains are starting to focus on now. Now, I'm not going to run through too many examples. A good one is, for example, one that I advise for. They've done it for a while, which is Unibright. But you could find this in a countless number of blockchains. I remember I got to meet a lot of people in Bangkok as well who have said that this has completely led them to 180 on their business model, whereas originally they were trying to sell their tokens to mom and pop who really didn't need it through an ICO. And now they're actually starting to sell those tokens and stuff through a framework where basically the company or the project will buy out the tokens as the company wants to use their services. So they don't even have to think about buying tokens off of an exchange to utilize their services. Much more streamlined, much more simple, much more practical in the long term. And it's almost like a voucher system in a sense. Alrighty. So the third thing here that really excites me, and I feel like, some people are talking about, but it hasn't gotten enough deserved coverage. And that is the peer-to-peer crypto trading and lending services, or crypto-backed lending services in the ecosystem of crypto. Now, the reason this excites me is for a couple different reasons. We'll go through the 2 different topics. First off, I like seeing people exchange things peer-to-peer. Not to mention, I love seeing the volume increase on these peer-to-peer exchanges because I know that it isn't rampant speculation like on most of the crypto exchanges, from the ones that have more fair volume like Coinbase and Binance to ones that are obviously reporting fake volume. This volume is real. And not to mention, it's people generally exchanging it who really need crypto. So we've been talking about, I'll bounce back to Paxful in just a second. We've been talking about the CoinDance volume metrics for local Bitcoins, which is one of the largest peer-to-peer crypto exchanges. And on a weekly basis, you can see that there's tens of millions of dollars being exchanged, many of which is in countries like Venezuela, Argentina, and a variety of economies as well that need crypto but don't have access to the exchange services. Well, these are awesome platforms where there's a lot of ways where you can actually go about privately exchanging cryptocurrencies, but you could also attach your bank account and do KYC, things of that sort as well. But I love this kind of stuff. It's really interesting to see stuff like Paxful and local Bitcoins coming out. Not to mention, they've been advertising a lot more at these events, which shows that they're actually, making investments in this bear market because they see that there's a relevancy for them. They're not, some short-term hype wave. They're actually something that's fundamental and needed for a lot of people. Now, the other thing as well is the different lending platforms. So Nexo, for example, has already processed $300 million in loans with over $1 billion in requests and 170,000 users. They've built up a major community ecosystem. So basically, you'll find across the board, there's another few examples here. Salt as well, which has been around for a while, has a wide range of different states in the US as well as countries on a global scale that it covers for business and consumer loans, but also Celsius as well has done over 600 million loans. We interviewed Alex Majensky, the CEO, back on the Dashcast on episode 2, back months ago. And now in less than a year, they've done over $600 million in loans, with the largest one being $5 million. So these lending platforms, these crypto-backed lending platforms, have different models, but it generally goes along the line of locking up crypto either in some kind of smart contract or in their custodial solution and earning interest on top of it as it's lent out. Sometimes in the case of Celsius, they conduct the loans, and other ways as well. You can choose out your loans. It's very different. There's like a dozen of these platforms now, but it shows that there's a real value proposition there, and I'm really excited. Now, to me, I think this is step one. It's not exactly crypto loans, right? I'm not giving you Ethereum, right? I'm not lending you 100 Ethereum and expecting you pay 7% interest in Ethereum back, plus the principal. I think that's coming in the future. And to be fair, I'm actually thinking of concepts on working towards it at the moment. But to be fair, this is the great first step that we can take because it makes use of what I like to call dead capital. Your capital is usually just sitting on an exchange, right? When you go on Coinbase and buy, Bitcoin, maybe buy, 0.1 BTC. It's just sitting there. You're not lending it out and growing interest on top of it. You're not actually making use of that capital, letting someone use it at the time who might need it for something. That's where I think we start to add a lot of value to the cryptocurrency space. And this crypto lending, crypto-backed lending is a great first step to that. All right, so we'll summarize the last few points here from 4 to 6. Status on ICOs, crickets. Outside of what's happening in Korea, the speculation is still rampant. But it's good to see because I think before we see ICOs come back, we need a much better model. As I mentioned, that software as a service model is good, but it's not perfect. And we need to build a much better model for this. Now, I know some people have talked about the IEOs, the initial exchange offerings, which we've seen on Binance off the Launchpad. I think that's a much better model. But I want to see better distribution models. You cannot have a few people owning 10%, 20% of the supply right off the bat, right? This isn't equity. Like, these are supposed to be tokens for a distributed or decentralized community or distributed or decentralized platform. I just don't think that the ICO model is perfected just yet. Next, on the topic of, hype and the next big wave of speculation, I know a lot of people have been talking about STOs. And do I think there's some potential there? Yeah, sure. But I think it's overhyped because if these are securities or measurements of some type of asset in a tokenized format, there's not too much room for speculation, right? No type of speculation that isn't already available when I own equity in a real estate property or in a company's stock, things of that sort. There might be some short-term speculation, but I really don't see this becoming a big market. I think, in fact, people are starting to realize that the real application here is money. Right? There's a lot of applications, but I believe money is the killer app. Bitcoin has shown us that over the past decade. And finally, not a single person showed me their Blockfolio or any mobile application of their portfolio. And I think that is a sign that we are in peak bear market, folks. No one's talking about their money. No, I'm not saying that's a sign that we bottomed by any means, but I think that is a really good telltale sign that people who are engaged in crypto right now either don't have their focus on how much money they have in crypto right now, or they simply just don't really care about money right now. They care about actually building up this space. And I'll top that off with the final remarks here, guys. The thing is, I noticed at these two conferences, comparative to previous conference events, that there wasn't so much a focus on money. It was actually a focus on building better money. It was a focus on building an ecosystem here. And yeah, sure, there's less people at the crypto events that I'm seeing now. And I've seen, for example, on my videos and other YouTubers as well, through subscribers and video views, things are going down right now. But the quality is still there. The genuine nature of people who are engaging in this space is still here, and it's growing stronger. And that's so exciting to me because, yeah, sure, we might care about the market. Yeah, sure, we might have some investments in this space. But I think we all really care about this technology taking off. And I didn't see that last December in 2017 and back a few months ago in 2018. But I'm starting to see it now. And it's starting to become much more likely that in later 2019 or 2020 that we actually start to get some real transaction volume, that we start to see some real applications getting built and people really using this stuff. So I'm excited for that. I'm excited to see the increase in volume on the peer-to-peer exchanges and the lending platforms. I'm excited to see the better wallets. And more than anything, I'm excited to see that people are starting to build better models for all these token sales that went on in the past. I'm excited to see the space grow, and I hope you guys are too. Definitely leave a comment down below as to what's exciting you guys, though. I know I wasn't able to cover everything, and this is free game. You guys can show whatever you want, but just do it with some actual fundamentals behind it, and talk about why you're really excited about it and what real value could be extracted from it. But anyways, that's it for the video, everyone. Thank you all so much for watching. Thank you for tuning in as always, and I'll see you all in the next one. Stay tuned.